Hi everybody, this is Gabriel Shahin, Certified Financial Planner and President of Falcon Wealth Planning. Today I'm going to talk to you about the difference of term insurance versus index universal life, whole life, all these other permanent policies. Because a lot of people try to make you that pitch of saying, why waste your money in term when after the 30-year period you have nothing to show for it? I'm going to share with you how it currently looks with the term insurance policy, because if you're 30 years old and a male, and in pretty good health, you're going to have roughly a $30 a month premium. That is roughly $360 for the year. If you were to do an IUL or whole life policy for $1 million benefit, like in this example over here, you would be paying roughly $500 a month. But the pitch is you're paying that for 30 years and then you're paid up and you're covered for life. And so with that $500 a month, that costs $6,000 a year of premiums. Okay, and what they'll pitch you is at the very end of those 30 years, you'll have roughly $250,000 left over. That sounds great, actually. But here's the thing, and then they try to sell you that you could take it out tax-free, and they try to talk about this loophole. Essentially, you're taking out the principal that you put in, and you can only take out half of it. So if you take out half, you get $125,000. Sure, it's tax-free, but it's what you've already put in. You put in more than that. $6,000 over a 30-year period. That is $180,000 you put into the policy. You're only taking out half tax-free. Why can you only take out half? Because the other half has to earn interest, earn money to pay for the loan that you took from the policy. And you have to now pay interest on it. Those things are not cheap anymore. They're not 2, 3, 4, even 5%. Some of these are north of 8% now, especially in rising interest rates. And here's another thing. The insurance, even though the payment is flat on this, what you pay the $500 monthly, as you get older, the insurance premiums go up. They don't stay flat. Your payments stay flat, but the cost of insurance continues to rise. That only works, and you only get to keep that $125,000 tax-free if you die. Some of these policies say you have to die at 95, some of them go to 105. Eventually it lapses because the cost of insurance is too high. Let's look at the opposite of term insurance, that, oh, it's not good if you goes away after it expires. But let's say you treat that term policy like a whole policy. So you're paying $30 a month versus $500 a month. Take that extra $470 a month, which times 12 months is $5,640, and invest that into a Roth IRA. The max you can put is $6,000 for a 30-year-old, up to $7,000 if you're over the age of 50. If you did that over a 30-year period, that extra amount, and you were able to earn an 8% rate of return, the stock market does well over 10%, you would have roughly $650,000 all tax-free, almost as much as the death benefit. And here's the thing, just because you're now 60 years old doesn't mean you're going to die then. In this case, when you're 60 to 70 years old, your amount continues to drop, your cash value. Where here, the $650, assuming you're earning a 7% rate of return, should double to $1.3 million more than the original death benefit. You could take that money out 100% tax-free, assuming you do that into a Roth. Folks, you cannot make money off insurance. It's not allowed to make money. Insurance is defined as to make you whole. That's how it works. Okay, for a life insurance policy, you can't get a $50 million policy. Maybe if you're worth $100 million, you can. But if you're not, you can't, because your spouse won't be upset if you died. If your 3,000 square foot home burns down, they're not going to rebuild you a 30,000 square foot home. It's to bring you whole. If you drive a Toyota Prius and it gets totaled, they're not going to replace it with a Rolls Royce. If you get sick, they're not going to give you a free toaster because you went to the doctor's office as a thank you. The goal is to make you whole. And insurance is not an investment. It's to protect you. Anybody who says otherwise is trying to sell you. Folks, if you have any questions on this, please reach out to us below.